So are you there?
It's gonna take a few seconds.
It might actually be better for him to stay on the phone. Maybe not. Hey, there you are. Hi, Patrick.
Henry, how you doing, buddy?
I'm good. Thank you for coming on the Henry McClure Live. Look at you. You put on a jacket and everything.
Come on, it's every day, every day.
All right.
Look
Okay.
sharp, feel sharp, be sharp.
So, there, you remember him?
Oh, what's up, Tyler? How you doing, buddy?
How you doing, buddy? Doing good.
Hey, actually, I talked with the owner of that building. I don't want to go into great detail about that, but you know the one.
Yeah.
And we're going to kick this up a notch. I don't want to do this deal live on this show, but we have an affiliation together, and the three of us. But why don't you tell us a little bit about your company and sell it?
I'd be happy to, Henry. I'd be happy to. So here at Leighton, we're a specialty tax consulting firm, and we specialize in helping clients find more money to put in their pockets. It's right around that time of year where you're going to be going to your accountant, and they're going to be saying, hey, you owe thousands of dollars in tax. And you're going to go, oh, I don't want to pay that. How can I reduce that?
Hang on.
And
I want you to know my clients pay millions of dollars in taxes, but go ahead.
well, then even better, we're going to save you millions of dollars in taxes. Because either way, the tax incentives that we specifically work on for real estate are all about scale. There's a $5 per square foot deduction, and there's a $5,000 per unit tax credit for residential properties. So some neat ways that we can kind of help clients all the way through the process and make sure that they have everything done, like the energy modeling, the on-site inspections, the building reports, the draft tax forms. We're going to give you all of that information so that way you can go back to your CPA and your CPA will say, hey, perfect. All I got to do is apply it, and there you go. You got your deduction.
So it doesn't get better than that.
Extremely easy.
Extremely
easy.
And so for this market area, we are a conduit to get to you.
Yes, sir.
Oh, your hair looks fine. I see you grooming. And then on the other hand, you got Henry McClure Live. So let's go a little bit more into the energy part component of this.
Yeah, let's dive into it. So there's three systems that we're really looking at for the 179 capital D commercial building tax deduction and the 45L residential home tax credit for residential properties. And we're looking at the lighting, we're looking at the HVAC system, and we're looking at the building envelope. And based on how these systems perform against a 2007 reference standard for commercial buildings and how they perform against Energy Star and Zero Energy Ready Homes standards for residential properties, is how we're going to calculate the dollar per square foot and the dollars per unit that you can save in a tax deduction or tax credit.
Hey, so I hope one of my clients calls me Henry Hall, like Monty Hall. I hope he's watching. I hope you're watching there, Mr. Brown, or Johnny Carson, I should say. And so we're going to put together marketing materials, and we're going to have it, and we're going to promote it. But literally, everybody knows I'm a real estate broker and a developer, and I'm not an energy or tax guy. But through our relationship, we can work together. But also, mainly as a developer, we can. This would be a great way to sell the tax credits and come up with some capital to do a deal.
Exactly. And one of the neat things that one of our engineers has put together is this capital stack booster kit, because all of these incentives are a way of financing, essentially. They're a way to kind of recoup your investment on the project based on the investment that you're putting in for energy efficient materials and systems. So that'll be one of the things that we'll be releasing with our marketing materials with you, is our capital stack booster kit to find every tax incentive that applies to your property and make sure you get all your money back that you're entitled to.
Now, Patrick, when we talked before, you said if a city is already hitting a certain building code cycle, that they meet the Energy Star ratings that you're talking about. What code cycle is that?
So it kind of depends on municipality, Tyler, but that's a great question. And how the Energy Star and Zero Energy Ready Homes metrics are set up is it all boils down to kind of the codes that are in place. You're in Missouri, and I think we discussed that.
No, we're in Kansas.
Kansas City, excuse me, Kansas. You guys are in Kansas, and we discussed that out in Kansas, you guys are building to a 2015 IECC code for residential properties. And right now, that is the minimum requirement for Energy Star certification in the years 2023 and 2024 is to meet that IECC 2015, and then you can actually become Energy Star certified. So if you're in a municipality that's building beyond certain building codes to the newest building codes like we are here in Massachusetts, we're building to IECC 2021, then it's a surefire fit that you're going to be able to qualify for the dollar amount values. And then we get to look at some of the other consulting aspects with, are we paying the proper wages? Are we in the proper communities? Is there anything else through the Capital Stack Booster Kit, like low-income housing incentives that we can leverage and build into the Capital Stack?
And it works between $1 per square foot and $5 a square foot based off of those wages that you're talking about. If we're paying the prevailing wages or the federally set wages for each of these trades, then we can hit that $5 per square foot. So that's kind of where it's interesting, because depending on the project, the ROI and the overall dollars spent, we can see at what point do we need to be spending. Do we make that money back off the square footage really by paying the prevailing wages on this project, or are we doing a low-income housing tax credit project and we just want that dollar per square foot? We try to find the best bids out there for the time and go forward.
Okay, so what you're saying is, what I'm hearing is that we can afford to pay more wages because we're going to get more back.
Exactly.
But there's got to be a profit in there, right?
What's that?
Well, there's got to be a profit in here for the developer.
Correct.
All right.
So
well, we got the right guy on this job.
Yeah, the prevailing wage requirements, prevailing wage and apprenticeship requirements for commercial properties and residential properties provide a 5 times multiplier on the incentive. So that's exactly how, Tyler, right? We get from that $1 to the $5 per square foot with that 5 times multiplier for that. And what was really, really neat, though, is for single family home developers. So if there's like developers that you guys work with or anyone watching that is doing like master planned communities, single family houses, those do not require prevailing wage and apprenticeship wages to be met in order to achieve the full credit and for those properties. So you can achieve the full $2,500 and $5,000 for the single family houses without hitting the prevailing wage requirements.
Okay, so now let's say we have the city of Topeka just passed a new code that you can build accessory dwelling units. Now, if it's a separate property on the same property, is it all considered one for this, for the consideration of this deal? Did that make sense?
Yeah, no. So you're talking about 2 buildings being on one piece
Right.
of land.
Right.
Yeah. So it kind of works on, if you've already done 179D or cost segregation on the other property, then you wouldn't be able to do it again on the new property. But if you haven't, we could do them both together at the same time.
We could just build them simultaneously.
Yeah, out of the other building, and that could even be used for other investment opportunities as well. That's what's really neat about these incentives is the look back period. So with 179D, we get to look back all the way to 2007. Not very realistic. We look for those buildings that have been placed in service or had renovations done since 2016, 2017 is where we're able to accelerate the most depreciation out of the building for 179D. And then for 45L, we're able to look back 3 tax years. So we're just wrapping up tax year 2024. If there's someone out there that hasn't filed their 2024 taxes and they put in single family houses in 2021, we can look back to 2021 and recapture that for them on this upcoming tax return.
This is really an eye-opening relationship. I don't know how you stumbled across me, but thank you. I appreciate it.
With the marketing that you already do and the media presence that you already have, it wasn't very hard to find you, Henry.
Do you know that this page is almost up to 2 million views a year?
Wow.
No, I did I did the math. You know, we need to tell that to Megan and to your people, because you really need to up our commissions.
We'll make that work. We'll make that work for you once we start getting the deals flowing.
And what I do love about this project is, even though you can't sell your guys' tax credits except for the energy tax credits, it's they are stackable. So you have your RHIDs, you have your low income housing tax credits, you have historic tax credits. As long as we can fit the building envelope to match the new standards for Energy Star ratings, which why wouldn't you? Because you want an efficient either, dwelling or commercial space that can be stacked on top of it. So yeah, does it stay with the developer, the what did you say, contractors and developers? Does it stay with one of them, or and then can you sell off the other tax credits that you don't need because we have tax credits with these? Or does it all just stay together? They take in all the tax credits because they're a big enough developer or a big enough business or a company or investment group that they need to have those tax credits. So there's a lot of versatility by adding this into the overall project envelope and the project packet.
Exactly. Spot on there, Tyler. Spot on.
I thought that was a question.
No. There's no
Okay.
question mark at the end of it.
Okay, I didn't.
Tyler, at least we're on the same
He's
wavelength.
just proving how smart he is, and that's good.
Pointing out some stuff.
I hang around the right people.
Tyler and I
All right.
are on the, we got it.
Just here to make you look good.
So what else do you want to talk about? How long you been with the company?
I've been with Leighton for 1.5 years. Love every minute of it. Our team is awesome. And if my engineer gets a hand on this video afterwards, he might blush a little bit because I'm about to brag about him. He's one of the most qualified engineers in the country, and actually worked with the Department of Energy to draft the Zero Energy Ready Homes program because he has so much unique experience in extreme climates like Colorado and hot climates like Arizona and across the country, growing up here in Massachusetts, working out in Western Mass and in the Appalachian Mountains, so on and so forth, or excuse me, White Mountains out there. And just so qualified to really walk clients through and provide additional consulting in the planning and development phase of your project to make sure that you're putting in the right systems, you're putting in the right materials, XYZ, to make sure that once your project is placed in service and completed, you're able to immediately file those tax benefits and claim them on your next return.
What was his name again?
That's Sean Reville.
And Sean was on the original conference call. He was after Megan, correct? Or
Yes.
vice versa.
Yeah.
Okay. Well, so you got quite a team. Now, tell me real quick, where are you from originally?
Originally, I'm from New Hampshire. So grew up in New Hampshire, going out on Lake Winnipesaukee pretty much every weekend. And now I'm down here in Quincy, Massachusetts, just south of Boston, and try to stay close to the water by living here on the coast.
Well, cool. So where did you spend any time in college?
Yeah, so in college, I spent time in a small town called Dudley, Massachusetts. It's about 30 minutes south of Worcester. Went to a school called Nichols College. had an unbelievable experience. The faculty was awesome. The school really sets you up for success by doing professional development seminars every year, a really neat program, an accredited business school, and one of the best sport management programs in the country that travels around the country and competes in national events and takes on schools like Georgia and Kentucky in these big sport management competitions.
So is this your first job out of college?
No, originally I started in cybersecurity and did a few internships with cybersecurity in college, but spent most of my my college focus was on finance and management. So coming out of college, I was really interested about cybersecurity, just really wanted to learn more about it, thought it was a neat kind of industry and up and coming. So worked with a IoT security company that specialized in firmware protection, and then an email security company who specializes in threat detection and automation on both the inbound and outbound side, which was really neat. So I learned a lot there, and I've been able to kind of translate a lot of those skills over to the tax world and help a lot of those companies even capitalize on some of our other tax credits like research and development.
All right. Well, how you doing on time, man? I appreciate you making time for me on the Henry McClure Live Show.
My pleasure. My pleasure. I got a meeting coming up in about 15 minutes, but other than that, I can hang around.
All right, but what I'd like you to do is, like below this in the comment section, put a link to your company so people can, that maybe found this interesting, could do a little homework. Will you do that?
Yeah, of course.
All right. You got anything you want to add, Tyler?
I think I stated all the things I really like about the program.
Well, we have a package coming your way. I talked to one of the owners of this project, and we're going to kind of dig our heels in on our first project for Agape Village, and it will be a affordable housing for veterans, and I think it will end up being a really cool project. And Tyler's going to there were some plans that were really outrageously cool, but we're going to kind of slim it down. We've talked about getting a layout, and we want to build it with all the efficiencies that we've discussed today, and but also make it also qualify for veterans to live in it. So you're gonna see some activity out of us.
Love that. Can't wait to see that come across and find a whole bunch of different ways to see how we can maximize the tax savings for Agape Village.
Well, I'm gonna sign off because I've got a full day, and man, I really want to thank you for making time for us here today.
My pleasure. Thanks for having me on the show, Henry. Good to see you, Tyler.
Pleasure.
Thank you for having me. And
All right,
chat with you guys again.
we'll stay in touch.
Sounds good.
Here we go.
Thank you, Henry McClure Live.